So, Bitcoin. Well, nice little move in the Asian session last night. Of course, we've got the crypto summit coming up on March the 7th. What can we expect? Well, listen, man, it's getting very interesting to say the least, given that the euro itself is going up back to back 1% days, 3 days in a row. And that's obviously because of what's going on with the influx of spending that they're going to be putting onto the defense with the euro. So lots and lots of money. Now, why isn't Bitcoin going up the same pace as euro? Because usually when the dollar's down, Bitcoin goes up, gold goes up, euro goes up, and every pair that is against the US dollar goes up. Tariffs again. Now, speculation has come in saying that there's going to be a reamendment to the tariffs, which explains why the Nasdaq and the S&P right now are tumbling over ever so slightly. Just be mindful when you're trading those guys today, because they'll bring it up, they'll bring it down, and it's getting very, very treacherous. I do think about the times when the markets were so good where you could trade to a zone and trade back away from it, and there was no BS of Donald Trump turning around saying, let's have a conversation. But these tariffs are designed to do something, and that's what he wants to achieve. He wants to achieve dominance with the US. If you're not with them, you're against them, and that's the truth. Now, going into today's live stream, ladies and gentlemen, who on earth could that be? Going into today's live stream, I'm going to be highlighting a very important area that I spoke about yesterday, and we can't dismiss it, all right? So I'm going to be breaking that down for Bitcoin. I'm going to dive into Ethereum and Solana. So if you are interested in those assets, stick around for that, as we will break that logic down for you. So if you are new, welcome to Traders Reality. Tino, kindly show us how yesterday's Brinks worked on you. Well, it worked and it didn't work, if I'm honest with you. Yeah, that's funny. Yeah, gold cards, that will be interesting. Anyways, let's get with the program, ladies and gentlemen, and break down what the story is. So, as you can see, we've had some data come out today. Now, that data itself was the ADP non-farm. What a reading. So there's less work being offered. All right, then. Fine. ISM services is due out at 3 p.m. Later on today, we're going to be hearing more information about the tariffs, because word is that they might actually undo the Mexico and the Canadian tariffs. Maybe that's got them a little bit scared to do things and to do business. Yes, it's true. Tariffs are a negotiating tool. But what's interesting right now is the fact that the ADP non-farms come in lower. And why I'm talking about this is going to help you understand the macro perspective of what to approach the markets with. All right? Why would big money go into assets right now? What does the ADP tell you? It tells you about the number of people available for work, or should I say how much work is available? It's less. That's not a good sign. If we look at it overall, it's not good if the US economy is not offering jobs. But at the same token, it is good news because we need more people unemployed to grant the idea of an interest rate cut. Right now, the US dollar itself is currently sat at topside with the pound at 4.5% and 4.5%. All right. So where's the yield? So the yield's like, hold on a second, I can get it with the pound and with the US dollar. So yeah, that's where we are with that bit of data. Today's ISM manufacturing services data coming out. If that comes in anything below 52.5, then it's clear as day that we could be heading into a contractionary phase in the manufacturing sector, which only leads to what? The talk of recession. If you keep on getting contractions in manufacturing sectors, in the employment market, and of course, you're seeing expansions in inflation, that's naturally going to be leading us towards the idea of a recessionary period. Might be a small chance, according to Goldman Sachs, but nonetheless, it's important for us to pay attention to it. Going into the stock market to understand where we are right now, we can see that they are suggesting by market surge, they are saying that you should have at least between 0% to 20% exposure in your portfolios, okay? So that logic there is telling you that you need to be very careful with your exposure. We know that everything is risk off right now, and we got smart money buying whilst retail is selling. The blue line is coming up, and if the blue line is moving up, it tells you that smart money is buying because they buy as prices are correcting, okay? Now, quickly going over into everything. Euro, what a joke. Euro is just off to the races. That tells you the dollar dominance is taking a nosedive. As you can see, it's down 1%, nearly 1% for the day. It's losing its value right now, but purchasing power is still at 4.3%. Still good, but nonetheless, it's going down. Rolling over to the Japanese yen, that's climbing back up, and I'm telling you, it's like they're not telling us it's the carry trade unwind, but it is. Now, let me put you onto a little bit of game with the currencies. Let me show you something. This is Aussie yen. Okay, now Aussie yen is what? What is it? It's just the Australian dollar against the Japanese yen. Look at what's going on. Aussie yen is going up, but Aussie is consolidating. Why am I mentioning this asset right here? Because it's part of a carry trade. What does that mean? Well, when you take either yen or dollars as low yielding assets and then convert them into higher yielding assets, you get the Aussie. Now, the Aussie itself will be used in terms of the dollars that they get after swapping their yen or their dollars into Australian dollars, and then they will go and seek stocks in the stock market, whether it's in the Eurozone or the US, whatever, okay? Fundamentally, they change their euros, they change their yen or their dollars, and then they convert it into Australian dollars and use Australian dollars to go and buy and invest. How do you understand the differences between it? Well, look at this. This is the NASDAQ, okay? That's the NASDAQ in purple. And of course, this is Aussie yen. Aussie yen going up, NASDAQ going up. Okay, Aussie yen consolidating, NASDAQ consolidating. Keep going back. You can see they work in tandem. So when you start seeing the NASDAQ going over, it pays for you to go and have a look at what's going on with Aussie yen. But if you see Aussie yen consolidating and the NASDAQ is dropping, it means that there could be an element of divergence between the guys who are actually buying the Aussie yen, okay? So those guys that are buying Aussie to then convert it into, to then get that and buy stocks, which means that the NASDAQ fundamentally should be bottoming out at some point on the assumption that Aussie yen maintains its stance to the sideways of price action like that, okay? So when you do see Aussie yen moving up, you can make the expectation that money is going to start coming into the stock market and NASDAQ will be moving higher. Let me give you another asset. Let's just look at Bitcoin. Can we apply the same logic to Bitcoin? Here we go. So as Aussie yen is moving up, Bitcoin's moving up. It's the purple line. So let me just remove that for you just to put it into perspective. Let's get rid of that. Here we go. So Bitcoin moving up, Aussie yen moving up, Bitcoin consolidating, Aussie consolidating, because they don't just have to buy stocks. They can actually get into cryptocurrency. Or is Bitcoin just following the bigger picture of what traditional finances do with big money? Okay, so it's really important for you to pay attention to Aussie yen and look at your asset and say to yourself, is a currency that is traded quite aggressively? Because remember, the yen makes up 17% of the dollar dominance. The Aussie doesn't make up anything. It's deemed as a carry trade. Okay, so it's one of the assets that benefits for investors to pick up a high yielding asset by using low yielding assets like exchanging yen to Aussie. So you can see that the disparity between any currency pair or any asset, look at this chart on Aussie yen and say to yourself, where could we be? So if Aussie yen is consolidating sideways, then that means they could be just buying up a lot of Aussie and then getting ready to mark it in to assets, which would then make sense as to why the NASDAQ could be getting ready to make a reversal to the upside. So if you guys ain't using that, then you're kind of missing out on the bigger picture of how currency pairs do impact the reason why investors are going to buy and sell. Look at this. You've got euro right here. You can pick up 1.79% on the euro. It's going up again. That's going to end up at about 1.8, 1.88 even if it does continue this rally to the upside. Okay. So that's something that you need to understand, because then you can then justify whether or not money is going to go into assets or not. Is it going to go into safe havens? Well, you can look at the yen itself and say maybe it could go into the safe haven. Investors are going into safe havens. And you know why that's the case? Because they're not going into the bonds. The bonds are still trading negative. They are actually down -2.7%. That's terrible. What's the yield doing? It's shooting up 2.27%. So what are they doing? They're just going over to the yen. That's all they're doing. And they're sitting in a safe haven because they're concerned. Go over to gold. What's gold doing? Gold is consolidating. It has taken a little bit of a tumble down, but now it's looking like it wants to try and sharply come back up again. It's just swept the Asian session range. Happy days. Okay? So they're getting ready to bid gold to effectively mark it up again. Now, the story with the tariffs are coming into play. We say it's here, like look, Nick, Canada and Mexico plan expected this afternoon. So we know at some point the market is going to hear from Donald Trump. So that's going to be putting pressure on the marketplace. So if you are making any money in the markets today and you've got that opportunity to do it, Take the profit because it's not a trustworthy market because Trump is talking. I want him to start going on tour to places and start meeting other people other than talking about the financial markets and his tariffs. When he stops talking about tariffs, that's when the market's going to go back to business and they'll probably say, he's full of it. He's not saying anything else important. Okay. I just want to hear Powell speak. That's the time I look forward to. Good old Powell. I've missed Powell. You know, he was a good guy. In crypto, Dan Crypto Trades. He's highlighted something very important on the crypto market cap. It says here it's fell back down below the 2021 highs yet again. It says here that last week's candle got saved, but upwards couldn't hold on again as prices slipped this week lower. So eyes on the weekly close. Wouldn't want to see too many weekly closes below this area to maintain high time frame uptrend. So we're talking, if we look at the image itself, he's making reference to the $3 trillion mark, okay? And if it can't stay above that $3 trillion mark, we've got ourselves a little bit of a problem. Now, let's just go over to the crypto market cap and have an understanding of that logic on where we are. Currently, we're at 2.93 trillion. Going into the totals chart, just to put it into perspective for you, let's go totals and let's have a look at where we are. So right now, we're at 2.89 trillion. For some reason, it's different. Anyways, 2.89 trillion across the board. Now, we just need to get back up above 3 trillion, which we need quite a bit of liquidity to come into play, but maybe the crypto summit has something to do with that. With that being said, it says here that Bitcoin recovery faces uncertainty as there's a reduction in long-term holders. So what's it saying? Well, it's effectively saying to us that the number of holders in terms of wallets has drastically dropped and is now, it was down and it's down by 800,000 wallets. Long-term holders are selling their Bitcoin, okay? So you've got to really say to yourself, why would they be selling if we're getting a big endorsement about cryptocurrency? Again, people are in crypto to make money. They want to make money. So if they see Bitcoin making a move to the upside, they're going to try and sell that liquidity, okay? Now, this is the thing that I'm talking about in reference to today's theme. This is the level you just need to be mindful of. What I suggest you guys do is the following. I want you to mark off at the price point 80,445. Okay, that's the first price point. And then, of course, down here, we've got the biggest, to the end of the biggest batch, 63,000. Wow, 63,000. Yes, let's just say 63,500 ish. Okay, this is the range that has a lot of orders and a lot of interest for people to buy Bitcoin. Now, let's just try and do mirror to mirror. Okay. If this is a reflection of people who want to buy it, what about the reflection of people that want to sell it? Do you see the same thing? No, you don't. Why not? Well, right now, you can see there's only a small amount of orders. There's $135 million order right there around the 100K mark. And it seems like the 100K is a wall of resistance for Bitcoin, okay? But down here, we're seeing a lot of flavor. Big flavor at that. 6.9 million at 72,500. Got another order here at 24 million at 70,550. Go down into this one. You got 15 million at 65,022. And then we go over to here. You got 40 million at 70,000. Now, let me just bring in the order flow itself. So if we have a look at this, large limit orders, I'm just going to read this off to you. So the nearest biggest order that we've got is at 89,520 with a bid for 22 million. Okay. Going down after that, you've got a small order at 3 million at 89,322. Going further down, I'm looking for bigger figures because I'm not interested in the smaller amounts. Keep going down, and I'm not seeing any big numbers until we hit. Here we go. We just had one up here. 30 million at 87,888. All right, and so that's further down. So we go down a little bit more. We've got 6 million and 4 million, around 86,889 and 86,500. Going beyond that, ladies and gentlemen, we have nothing even remotely interesting until we get down towards, well, nothing. Nothing's coming up. Okay, so it goes all the way down to 81,500. So at 81,500, which puts us roughly inside of this range right here, inside of this zone, you can say that there are a number of bids in that direction, okay? But I'm not seeing the bids. The bids are down below. So that means whatever event that can happen, there is a possibility that Bitcoin will clear this range. The only way Bitcoin will not come back down, guys, is if it can retain itself. Quite frankly, from the order flow perspective, Bitcoin needs to, in principle, stay. Just go away. There you are. It needs to stay above 80,000. That's the logic, okay? And that puts us all the way down here. Bitcoin needs to stay above 80,000. Now, what does that mean? Well, it effectively means the following. From then to the current price point, 12%. So if Bitcoin were to drop 12%, it would get to 80,000. All those orders that I mentioned inside of here, part of them will get taken at this low. What about the rest of them down below? Okay, then. Well, that puts us down to 68. So projections are coming out across the board saying that Bitcoin could go down to 70K. So let's understand what a 70K drop would look like on Bitcoin. Take the price, look at where it is right now, go down to 70K. So that would leave us with a 21% drop from this current price point in Bitcoin. That does not include the 28% drop already from the highs, okay? So if we go to the all-time high, we effectively would have a 36% correction, all right, roughly, on Bitcoin if it dropped from the high all the way down. That will be a total drop in Bitcoin. That's not bad. Even if we are in a bear market, Bitcoin usually corrects 60 to 70% at best of times, okay? So that's not bad, even if we do go down to 70K, all right? Now, you might be thinking, oh, I don't want it to go to 70K to, you know, my bags and all that stuff. Yeah, whatever, man. Don't play trading. Do not get involved in it if you can't absorb corrective moves in cryptocurrency, especially cryptocurrency. All the old heavyweights back in the day when they were trading stocks would always say, like especially William J. O'Neill, he would say, never risk anything more than 8% of your capital on any trade. Now, you think about that and you say, hold on a second, what's the industry averages don't risk more than 1%. All right, why is he talking about 8%? Well, this is coming from a guy who was trading off the daily, the weekly, and the monthly, okay? So he's got to give it room to have flexibility to make movements, all right? Now, some of you might know it as the canceling method. It's an acronym which effectively tells you why you should buy a stock if this certain acronym criteria comes into play with this stock. Go and check out William J. O'Neill. It's the company that I got that poster from when he was alive, and he's only just recently passed away. God bless you, Jim. Anyways, with that being said, guys, to put into perspective, an 8% drawdown on your capital, you might look at it and be like, ugh. But remember, you have to factor in a bigger move. So the less drawdown you offer your capital, the less of a move you're looking for. Now, the people that try and finesse 1% on their accounts, now it's all relative, 1% to 10K, 1% to 100K, whatever, okay? If you're trying to finesse an entry point to the point where it's so perfect, you're going to spend a long time trying to work that out, okay? You've got to be very careful with it. So be realistic with your expectation of risk, all right? Now, going into Bitcoin's price action right now, we'll just quickly go over to Solana just to break it all down. There is ETF discussion about Solana, and it seems to be holding out very well above this 124 region. If they lose the 124, we're going down, and it's good night. Going into Ethereum, she's been very, very tricky, choppy as of late. One positive green candle on the 5-hour chart after all of this madness to the downside. We are seeing it starting to correct ever so slightly. And I do believe at the start of the market today, we're probably going to see some very interesting behavior because I'm seeing right now, Ethereum is down, Bitcoin is up a little bit, and Solana is down. Going into the Bitcoin dominance, I'm telling you, we're going to 63. We're going up here, ladies and gentlemen. I said we're going to go above 64, but we're going to go up towards this 63.3% region. That's where I think everything is going with Bitcoin. So for those of you with the Bitcoin dominance, you're going to see your alts bleed out pretty badly. So ultimately, back into this red vector candle recovery and finalize the vectors of the top side there, I would expect Bitcoin to go up towards 63.5%. So when we see that happening, happy days. Going over to XRP right now, pretty much doing everything other than the XRP formation. Going into BNB, you can see that's going sideways, trading below the $600 mark, and it's doing all right to say the least, given all this madness across the board. HBAR up nearly 3% again. It's quite a volatile asset. And just to put it into perspective for my guys in the Discord that always play around with this asset, it's an absolute nut job, but Fartcoin, oh my days, Fartcoin is not really doing too good right now, but it looks like it could be on the trajectory to try and make a little bit of a recovery up. This is the 5-hour time frame, so just be mindful of that red vector candle. It is a very fast moving asset, so just be careful with that. It looks like it's bottomed out from these lows. If I go to higher time frames, you can see that it's just since its incision on Pancake Swap, made the move up to come all the way back down again. So just be careful with that, guys. All right, cool. Now let's just get into some day trading activities and just break it all down for you. Have you got any questions for me, ladies and gentlemen? Can you compare the liquidation heat map high time frames with the order book? So aren't they telling a different stories? Listen, the liquidation heat map themselves, right, is just a representation of people with their expectation, okay? So right now you can see a lot of shorts have been getting smacked about on the daily time frame of this. And we've got a few more shorts coming into play on the top side of 90,900. What you got to look for is the bigger picture. So looking over the last week as such, You can see that a lot of people have been expecting Bitcoin to drop down, which is naturally what we have been seeing. It has been going down. But what's going on now is they've just now liquidated quite a few short sellers. At the same time, you see this area here. This area here was an area where people were running shorts from. They're going to look at this high and then re-engage in the shorts in and around these zones, okay? So psychologically, when you look at this, don't look at it from the perspective of where the liquidations. You've got to say to yourself, is price action reflecting and putting pressure on short sellers to add to margin? That's what you've got to look at it as, all right? Because if we look at this here at 87,500, historically, that's where people went short from. Well, it's now broken that point, and there's even more shorts coming into play. Look at these guys that were short there. They were like, okay, it's going into resistance. It looks like it's going to head into a resistance again. I'm going to go short from that point. They got liquidated. Now we're seeing another batch of people trying to come into play to effectively go short on Bitcoin. Remember, what fuels rallies to the upside, especially in the leverage markets, is liquidations. It is. And they've even written articles saying that Bitcoin's price is affected by futures more than spot. And that's the truth. Why? Because people use leverage. They're borrowing money, and you can see it's evident in front of you. Now, the top side of Bitcoin at 95K looks like it's a massive resistance point, but it's showing you psychologically that people have an expectation of it to go down. The market will keep on going up to sweep that area of liquidity to make those same people believe, yeah, it's going to go down again, and then it will continue to go up. Okay, so it's like a short, it is technically a short squeeze that's happening, because if the biggest move in Bitcoin is going to come and send it all the way down, then they're not going to do it on the cheap first. They're going to make sure they do it as high as they physically can. Okay, and then when you look at the chart from a day trading perspective, you've got Bitcoin heading in towards the Asian session range on Monday. This is a very important area for us, but ultimately you've got this red vector candle region right here. And then of course, if any information comes out today regarding Trump and the tariffs themselves, then you're going to see volatility occurring across the board. All right, all I can say to you is to follow on to these charts right here. This is the UVIX 2x long VIX futures. So this goes up, the stock market goes down. And then you've got this one. This is the short futures. When the stock market goes down, when the stock market goes up, this goes down, okay? And the way you use this is to really work out the commitment and the aggressive nature of traders that actually come into the short-term futures ETF markets for VIX, okay? Now, let me show you something here. In front of you, in front of you is this chart, okay? Now, this chart right here effectively doesn't look great, but this is the VIX futures markets, okay? So it's the UVIX, all right? Now, this right here sometimes does give you a clue about where people's expectations of price is. So if this goes up, the stock market goes down, right? If this goes down, the stock market goes up. When the market's actually open, you're going to start seeing some orders coming in. Here you go. You see all those orders right there? So that, and there we go. It's got some nice orders coming in. So let's just have a look at these orders from this perspective. You can't really see it, to be fair, but yeah, it's very, very small. But let me just zoom into it. So we've got 300 contracts there. Keep going up. 300 there. 300 there. Hold on a sec. That's an algo. All right. So that's an algorithm. It's just planted a whole ton of orders in there. And you just saw that for yourself. Okay. And more orders are starting to come into play. Awesome. Right. So that means people are offering out these futures contracts. So that could tell me that price is going to go up for this VIX future, which means that assets are going to go down at the open. Okay. And I can see I've got a massive order up there. If I zoom in and see what order size that is, that order is around 400. So not really that much, but it's the largest one. Okay. What I like to look at with this is if I start seeing quite a few bids coming in, then I make the assumption that the volatility index is going to start rolling over. That means that the stock market could actually start looking higher. So then that's where I start looking at price action and say, has it swept a previous Asian session range? Has it done the Brinks box sweep? Is it showing a green or a blue red vector candle coming into play? I'll use that and say, okay, there's my conviction on why I believe price is going to go up or down. Okay. It's a quicker way when you use that chart. It's effectively a quicker way of looking at the VIX because the VIX itself moves so bloody slow. It really does. And you've got a red vector candle up here, which could tell me that we could see prices of assets depreciating when this pumps up and then it comes back down again, similar to what they did yesterday. They hedge themselves and then everything comes down. Sorry, they hedge themselves, initiate the hedge, assets go down, you buy at the highest point, and then as this is going down, assets are going up, which you saw yesterday. Okay? Why so confident on the dominance? Because there ain't no one with the brain buying altcoins. They're even talking about it now. Just keep your strategic, crypto strategic reserve exclusively for Bitcoin. You know, Bitcoin goes up, everything goes up. All right. Just take that into consideration. I think altcoins are going to have a little bit of a struggle. I mean, look at it. So, look, it's not... I know most of you want me to say good things about altcoins because a lot of you do hold a lot of altcoins and you're wondering, when is it going to start working? When are we going to go into altcoin season? It's crypto reserve season now, guys. And that's what everyone's going to be waiting for. All right. Even with the ETF itself, when these guys stop shorting the ETF or selling the ETF and shorting Bitcoin, then we'll start seeing some nice movements in Bitcoin. But like I said to you before, on the daily time frame, unless you get Bitcoin closing above the daily time frame on the 50 EMA right now, and this is, I'll be straight with you, Hall, with this, okay? You might say to yourself, well, I'll wait until the 50 EMA comes into play, all right? And then price goes above the 50 EMA for 2 days, and then it ends up coming back down. Tino, you said, all right? Forget that. What if you took longs now? What if you were in spot positions right now? What level would you say that it would hurt you if Bitcoin went to? Well, we know this area right here could be a problem for us. So you've got to factor in that Bitcoin could go to 70K. So you look at it and say, hold on a sec, 70K is all the way down there, bro. Like, I can't absorb that. Okay, then let's do this. Hypothetically, you take a spot trade from here. So that means you're in at 89. In fact, this is not financial advice, ladies and gentlemen. I know you're all adults. Just take this with consideration, okay? I want you to think about the thought process. Say you take positions in this range, okay? At the current price. You've just woken up and you said, darling, can you put the coffee on for me? I'm going to spend some money today. She's like, oh, we getting that little tree hut? No, we're not. We're getting Bitcoin, all right? Anyways, you buy Bitcoin at 89,602. Bang, darling, we've got Bitcoin. She's like, what does that mean? And you'll be like, don't worry about it. You then say to yourself, it's March 7th. We've got the crypto summit. Summit's going to be said on the crypto summit. And the last time they said summit about crypto slumped after it pumped. Now, looking at that, I'll say to myself, right, 89,000, I'm in at spot. Some of you might take a leverage trade and be like 5x, 10x, cool, whatever. Not too much leverage, please. You then look at it and say to yourself, well, there is quite a few things that could actually compromise. We've got this story here. We've got the tariffs. We've got the new data that's coming out. And we've got Trump talking shit all the time. But nonetheless, where would I act if price got to it? So what you want to do is you want to go and get yourself the midpoint of your stop. So hypothetically, say you take an entry from here and you've got a stop loss all the way down here, okay? And you are effectively waiting to buy Bitcoin to see it go and claim the all-time high. That's your range, okay? Don't come to me about what's the risk reward with that, Tino. Forget that, okay? Listen, you've got to say to yourself, what point will I actually get messed up? Well, if I were to take the midpoint of my stop loss, I would then have to say to myself, if price were to go back down to 82, what's going on macroeconomically speaking for price to grant it's going there? When you look at the macro picture and you say to yourself, it has gone down to 82,000, but there's something that could be happening. There's something that's developing. That's something coming into play. Whatever that something is from a macro perspective, you've then got to say to yourself, well, if I close off the position at 82,000, I take only a 50% loss of whatever it is that I'm doing based on my initial stop loss. So if your initial stop loss was 1,000, for example, you're only losing $500 in principle, which means that you've paid $500 to be sure that you are not in the right direction, okay? It's cost you $500. So then you say to yourself, right, I'm going to close off half my position at this point. You sit there and you wait. Technically, you've got a little bit more freedom for price to go down, but when you think about it, you've taken half the risk off. So you are effectively doubling your risk in principle. You've got freedom to go down just a little bit more, okay? So you could then say, all right, if I hold on to my exposure right now and wait for it to go down to 70K, I'm wrong. I lose my 500, okay? I lost 500. Now I'm losing my whole balance. Fine, okay? But it's all about what happens at those points. Because if you see price at this point and it starts to show a promise, then you'll say, right, I'm committed to holding on. It then comes straight back up to what the entry was. You might be in a position to say, you know what? It's above the 50 EMA now. I'm going to add to the play. What I'm trying to say to you guys is you're not going to know if Bitcoin's going up if you have no exposure in it. You need to have exposure in Bitcoin to understand if you should be holding on to the exposure, which favors either higher prices or lower prices. The lower Bitcoin's price goes, the less time you need to be in the chart for it in terms of exposure. Now, you might be doing the DCA story, but that's not going to work for you when you're looking to make money. Bitcoin could slump all the way down to 70K and you'll be like, I'm just doing DCA on Bitcoin because I believe it's going to hit 70K and go to 150,000. Where that logic comes in, I have no idea. Beyond price discovery of 108, 109,000 high, how are people coming up with the idea of 150,000? We go back to the last bull market when Bitcoin did hit the all-time high at 69,000, all right? There was talk about Bitcoin going over to 150,000 based on it hitting 69,000. Was it based on the rainbow theory? No. But what reason did people have to believe it was going to go up to that point? Well, when you have a collection of people that have that expectation of price to go beyond a certain high and more, you've got what? You've got everyone in the same boat, everyone's point of interest, everyone's capital stuck. So the market is naturally going to go down because they're not going to get entertained. Like, there's only so much money that retail can actually make in this game before they actually wet the bed and think, what am I going to do now? And then the market then just adjusts, it moves, you know, because fundamentally Bitcoin, the same amount of Bitcoin is circulating. So why is price going up or down? It's still around. It's the same amount of Bitcoin, you know? We've got a supply shock on the exchanges. Why isn't Bitcoin at 2, 3, 400,000? BlackRock's picked up 500,000, nearly 2.7% of the supply. MicroStrategy nearing that 457,000, like quite a bit of BTC, you know? It's always exchanging hands, but it's the same Bitcoin. Never mind. Any questions? What do you think about the lower rates? Hold on. What do you think to the idea that he's getting lower rates by crashing the stocks and driving the bonds? No, listen, he's not. What you've got to understand is Trump. There's a problem with the deficit, the debt deficit. All right. That's why he's doing this Doge Council thing, sacking people, selling American buildings, you know, just to raise capital. This $5 million gold card story. If the 200,000 people that do get involved in it, it's going to give you $1 trillion, going to shave off the debt. All right. Happy days. The thing is, he needs to effectively get enough people to want to commit to US bonds. But how do you encourage people to buy debt that technically is no good? Think about it. 10-year bond, it's undermining the logic of the bonds, you know, and it's even though the bonds market is going up, this is favoring the US government because people are giving the US government money. And then Trump's going to be like, save it, put it here, do this. Well, no, technically he isn't, but the Federal Reserve in principle would put that money to work. Okay. If they're going to keep on reducing their balance sheets, it's going to be a bit of an issue for us. We want them to increase the balance sheets. We want them to keep adding and putting the money to work. But no one's been going into the bonds as of late. But this fast move up in the bonds, the fast move up in the euro is getting people's attention. Okay. So just take that into consideration. Anyways, any other questions? What are your thoughts about on entering the bear market? Do you think the Fed will end quantitative tightening and reduce rates soon to stimulate the economy? Listen, jobs, low. ISM comes in and it shows that everything's fine. The economy is fine. Every single one of those speakers have turned around and said that the economy is fine. The economy is fine. The labor market is great. Shut up, man. I don't even know if you're just saying that just for the sake of saying it, given that they redefined the definition of what recession was. So I'm already speculating on what their belief is about the economy. It doesn't make sense. All right. If those guys are used to paying $300-400 for a lunch, they ain't going to be complaining about the cost of eggs now, are they? No. Egg inflation, man. There's a problem with eggs. It ain't going to impact those guys. All right. Especially when you lot pay for it because your taxes pay for those meals in principle. But it's a tough game. It's a tough game. Oh, here we go. Bitcoin. Here we are. Standard New York flavor. Standard New York flavor. This is what we expect. This is what we expect. Anyways, ladies and gentlemen, buy the rumor, sell the news. Come on, man. You're better than this. Yes, the crypto summit. Look, if it's buy the rumor, sell the news, fine. Okay. Buy it up, comes into the summit, sell it. Because everyone's just going to be like, yeah, quickly go, buy. That's exactly what's going to happen. All right. Any other questions, ladies and gentlemen? Trump is not a deep thinker. Bitcoin laid an egg. Probably get a smaller tip, though. Go Lidl for 139. Okay. Eggs is gold. Golden eggs. Whilst we're looking for more questions, guys, 353 of you like the stream. That's sad. Be sure to like it. Thoughts on large MMers counter trading, market makers counter trading Trump if the game is taking liquidity? I don't even think they're counter trading Trump. I really don't. I mean, what I will say is this, right? You've got the NASDAQ rolling over, but that's because we're going to have, we'll hear about the developments of the tariffs. Okay. So this is what you naturally expect from the NASDAQ. And they did this yesterday. Look, they're going to do the same shit again, down to then make a reversal. And if you guys are all trading Bitcoin and what have you, get to BTCC because they do give you the option to actually trade it. So you've got NASDAQ here, Tech 100, and you've got stocks. And you've also got, of course, Forex. You can trade Forex as well. This, for me, is a platform that you can hedge yourself if something hits, if something's wrong. So if Bitcoin ain't doing what you want it to do, and you see that or you're in a drawdown on Bitcoin and NASDAQ's going down, you've got capital to load up into NASDAQ, take the trade on NASDAQ, run the short, make money on the short, and then you've effectively offset the loss on Bitcoin and keep on playing that. Keep buying and selling NASDAQ because NASDAQ is the only instrument that will move at speed next to an altcoin. All right. It's a very fast asset. So you can hedge yourself. I can be in a drawdown on Bitcoin and I'm like looking at it. I'm thinking, okay, NASDAQ looks like it's going to try and mark up, but Bitcoin moves so bloody slow. I can then exploit that on NASDAQ, make a few £100 profit and then come away. What's my expectations? Am I down on Bitcoin? Yeah, I'm only down 500 say, but I've just made 300 on the NASDAQ. Happy days. I've now given Bitcoin a little bit more room. Okay. That's what you get with BTCC, and great for anyone in the United States. And of course, no VPN is required to use it. So BTCC, it's in the description of this live stream, ladies and gentlemen. Okay. BTCC does have gold. All you've got to do is go down and it says right there, gold, and it's got silver. Okay. So gold, it's got the indices, and silver is somewhere down below. I think it is. Here we go. I just saw it. Silver there. All right. Cool. Any other questions? First time here. I liked you already, submate. Mad love to you, Manabutos. Huh? Manabutos. Traded the W1NQ yesterday, but literally 0 vectors on the 5-minute time frame. And a 4-tick spread at one time was a weird day. Yeah, you want to step away when there is a... Look at NASDAQ, man. What a treacherous ass. My days. No KYC for Americans, and if you're in the UK, I believe you can use a VPN. That's true. I don't see it. I don't see it anywhere. Only on crypto. I don't get. You're not using the right BTCC, man, because it's right here. Go to markets and then go to tokenized stocks and commodities, USDT perpetuals, and it's there. Look at the tabs at the top. Anyways, with that being said, ladies and gentlemen, let's see what the day shows us, man. Just be careful. Trump's going to be talking soon about these tariffs. It will be revealed later on. So just if you've made money, take it, all right? Because quite frankly, the way this game is going to behave today, you're waiting on Trump's expectation. Just pay your flipping selves, all right? I'm going to go get myself an egg sandwich. Mad love and respect. He's a wet guy. What a clown.